Good morning, everyone. Can I please invite you to be seated? We're going to start in a few seconds. Yeah. Thank you. Look, it's been a wonderful morning, and it's great to see so many people are here today attending the AASB 2023 AASB Research Forum. I just want to quickly remind you the purpose of the Research Forum. We started the Research Forum in 2016, and the purpose of the Research Forum is to bring regulators, policymakers, standard setters, and academics together to discuss certain accounting topics, share ideas, and hear perspectives from different stakeholders. So today we're going to have a packed program. We're going to listen to two research teams sharing their research findings, and we also have panelists from different stakeholders discuss the topic. And I would like to also thank University of Queensland and also Swinburne University to have this joint partnership for this research forum. And the main theme today is a topic that we've been talking a lot for the whole year, that is the connectivity of financial and non-financial information. With that, I would like to invite Professor Kathleen Herborn from University of Queensland to officially give an opening remarks. So before that, I'm going to read out Professor Kathleen Herborn's bio. So Kathleen is a professor in financial accounting. She has a PhD from University of Adelaide, focusing on cost environmental accounting by organizations managing multiple purpose natural resources. Kathleen's research is concerned with corporate social responsibility for issues such as climate change and tax transparency, with a focus on how public data can be used in debt and equity markets to inform shareholders about organizational performance. Her other research interests include the role of financial accounting in informing capital markets in areas of ambiguity, such as impairment, business and operating risk, biological assets, and the accounting profession. Kathleen's published widely in international journals, including top journals, and she is currently a member of the academic advisory panel of the AASB. And she's also an associate editor of the Australian Accounting Review. Last year, Kathleen also presented her research finding in our last year's research forum. And today, she's with us to open the session for us. So welcome, Kathleen.
It's always dreadful when you hear your bio, isn't it? I think that was taken off the website. If I had a choice, it would have been very brief, so I apologise for that. The UQ Business School is delighted to be involved with the 2023 Research Forum, and we continue our support from 2022 when we hosted the satellite event. It is an excellent initiative that is of value to both academics and practitioners. So what is the value to academics? Speaking from experience, as Eric pointed out, I was part of a 2022 research team with Dr. Kevin Tai from RMIT and Dr. Young Xu from the University of Queensland, and we presented on the climate-related disclosures of the ASX 200. Regular meetings with the AASB staff gave us real-time feedback on what was relevant to policymakers and practitioners. This was key to us because our project, unfortunately for us, focused on the impact of practice statement number 2, issued by the AASB and the AASB. Now you might remember PS2 highlighted that irrespective of numerical amount, climate-related risks will likely be material and therefore require disclosure. Well, international and national developments exploded and overtook PS2. We saw the establishment of the International Sustainability Standards Board. We saw the release of IFRS S2, climate-related disclosure, and we've seen the Treasury consultation on implementation of S2. Our project's relevance imploded. But lucky for us, The AASB staff gave us invaluable support and allowed us to pivot our project so that by December 2022, we could talk sensibly about things like the relevance of the SASB standards to the ASX 200 and some very interesting assurance practices that were occurring. A second invaluable outcome to us as academics was contact with practitioners. This allowed us, if you like, to open the black box of climate-related disclosures and assurance, so that in post-forum interviews, which we've just recently finished, we got to talk with managers from ASX 200 companies, auditors from accounting firms, consultants who were setting up these systems to measure climate-related performance, and institutional investors. So what is the value of this forum to practitioners? Well, first, the AASB staff guide researchers in real time on what is important to policymakers and practitioners. Second, the research team has a set of skills, and we will undertake the research free of charge, allowing the investment of scarce resources elsewhere. Third, from my experience, practitioners had an opportunity to provide policymakers with real-time feedback on what was working well and on sticking points that required further guidance and thought. Fourthly, and not least, one of the most common questions we've been asked in our interviews with practitioners is, what is everyone else doing? Is this a common problem? How do other companies deal with this issue? And we could answer these questions. So how can we collaborate further? We can continue with these types of events that break down the silos of practice, academia, and the AASB, allowing communication and the building of connections. You might not realise the impactful research being done by some of my colleagues, for example, at the University of Queensland. To name but a few, we have Associate Professor Robin King, who is a management accountant researching accountability in healthcare, working with staff from the Prince Charles Hospital, as well as the Australian Association of Practice Management. Associate Professor Sergeja Slapnikar researches cybersecurity governance and risk management and has recently been elected to the Internal Auditors Education Committee. Dr. Mark Wallace has worked with others with CAANZ producing publicly available reports on Australian financial reporting benchmarks, key audit matters, and climate risk. We also have Associate Professor Mohammed Nadeem, who researches the economic consequences of eco-innovation and the transition to renewable energy consumption. The onus is on us as academics to make our research relevant and penetrable to a wide audience. From a practitioner's perspective, please do take advantage of any connections that you make. It could potentially be the start of a conversation that continues over time and at a later date delivers results from a research project that is of direct relevance to you. So thank you, and I hope we all enjoy the forum today.
Thank you, Kathleen. So last year, the research forum was actually held in Melbourne, and then we had the satellite events happening in Brisbane. Whereas this year, we have our research forum in Brisbane, and then we have the satellite events in Melbourne. So right now, we have about 30 people attending the Melbourne session, and our chair, Keith Kendall, is also in Melbourne facilitating the Melbourne session. And we also have about 200 people attending the events virtually. So good morning, good evening, good afternoon, wherever you are to attend this session. So the next person I would like to invite is someone who inspired many people, including me. So her name is Alison White. She is the Deputy Chair of the AASB. She is the leader of the National Accounting Technical Team in Deloitte, in Assurance and Advisory Division. She has over 25 years experience in audits and accounting advisory experience in multiple countries, including Australia, Hong Kong, and South Africa. specializing in resolution of complex accounting issues. She was previously the project leader of the firm's initiatives in relation to the accounting for valuation and impairment of non-financial assets. She is a member of the Deloitte Global Expert Advisory Panel on Leases and the Property Council of Australia's National Accounting Roundtable. Areas of specialist expertise include leasing and off-balance sheet structures, revenue recognition, impairment of assets, mergers and acquisitions, and asset sale transactions. So with this experience and all these practical insights, we'd actually like to hear from Alison White this morning. And she will have some question time in the last 5 to 10 minutes. If you have any question would like to share during the session, there's a QR code around this room, and you can also log into a website. Let me just look at the information if my phone can recognize my face. It doesn't. There you go. You can actually log into a website. It's called pigeonhole.at. So pigonhole, pigeonhole.at. And the passcode is AASB23 with capital letters, AASB23. You can log into the website and put in the questions during the session. And we also have mics passing around as well for the Brisbane audience when we have the Q&A session. So with that, I'm going to invite Alison to give a speech, tell us your insights and perspective. Thank you.
Thanks very much, Eric. And it's an absolutely fantastic honor to be here today with you. Kathleen, so much of what you said resonated with me, and what we love is that ability to talk to you as academics as well around what we're seeing. So the offer's absolutely there, and I would encourage each of you to engage with the business community, the accounting profession at the firms, and all of the firms of all different sizes. It's so valuable to us. Thank you. So the academic profession is something that is really close to my heart for a number of reasons. I love learning. I just love learning new things. And I think that was driven by one of my university professors that I had, that I still think about often and am inspired by, even though it's probably 20 years later or something like that. And she really inspired my love of learning. She's actually in Australia right now, but it was absolutely fantastic. So you can really make a difference for people and inspire people coming through to see what they can be. As part of becoming a chartered accountant in South Africa, we had a fantastic program where we had to work for 3 years. At the time, you could only do that at an auditing firm. They've now opened it up to working in practice. But we could also work for a year at a university. And my university picked a candidate for each of the subjects that we did. So it was accounting, tax, auditing, financial management. And I was lucky enough to be selected to do the accounting position. And so I lectured for the year once I'd finished university before I then went and worked at the auditing firm. And that was really good experience. I was actually lecturing not in my home language, which was also an interesting challenge to me. So I learned a lot from doing that and dealing with different cultures, and just found it a fantastic experience. But one of my memories was the new deferred tax standard had just come out, so IAS 12 or AASB 112, and it was a whole new approach from doing an income statement accounting, for those of you old enough to remember, to going down the balance sheet route. And I had to lecture this to the third years and honours students. It was the first time. There was no practice. You couldn't go and look at what other people were doing, and you had to try and understand these principles, which were good, but quite different from what we were used to. So that's a memory that's stuck with me for forever and still does. And I can still picture some of the flow charts and diagrams we put together at the time. And I think now in my job as it stands today, and I'll talk a little bit more about that later, I think research is such a powerful facilitator to improve quality. Quality is incredibly important in our profession through so many avenues, whether it's trust or through actually what we do. And I really believe that if we have a well-connected profession between the accounting profession, the business community, and you as academics, that we can really play a pivotal role in driving quality. And the new sustainability and climate standards are the absolute perfect opportunity to do this. It's new. Investors are looking for greater transparency. Our communities want to know what's going on in businesses and how businesses are responding to climate change and other sustainability issues, depending on the industry. And so we really have an opportunity here to make a difference to Australia more generally through what we do here. So really what I wanted us to challenge us to do, we already do this, but just to even really bring that home is for us to work together to make an impact that matters for our communities and our people in the accounting profession and the academic profession. So I thought just quickly, I would like to do an acknowledgement of country. It's something that's really ingrained with us in Deloitte and really important. So I would like to acknowledge the traditional custodians of the land on which we meet today. So here in Brisbane, it's the Turrbal and the Jagera peoples, and we pay our respects to the elders past and present. So just a very quick overview of what I'm hoping to cover today. I'm just going to talk a little bit about the landscape in which we're operating at the moment, and then I'm going to talk to how research is important to us and standard setting, as well as for me in the profession, actually working in one of the firms and working with clients every day. So as a backdrop, you will be aware that being in the accounting profession right now is very interesting, very challenging, a lot going on for us. So there are increasing investor expectations. They want to know what companies, as I said earlier, are doing to manage the impact of climate risk on their business, and how they're going to manage either with a transition risk or physical risk. These expectations are increasing every day. I mean, the pace of change we've seen over the last year is absolutely phenomenal. We've seen the quickest case of standard setting. I was very pleased to hear Kathleen say what was 2023 famous for was the climate and the sustainability standards coming out. We've been debating that in my house. My son thinks it's the biggest Lego store opening in Sydney. And then my daughter thought it was Australia winning the cricket on Sunday. So a few different things, but to me, the new standards are one of those highlights. But I think the thing here that's the opportunity is everybody's learning. This is new. No one has all the answers. So when something is new, there is an opportunity for an education. There's opportunity to actually come together and make a difference and work together to understand this so much better. And the research is going to play a huge role in that, as well as the education we do with that research. So it's just fantastic. The other thing for us is technology. It just moves quicker and quicker. We saw obviously ChatGPT come out more publicly available at the back end of last year, but really for most of us this year. How does AI integrate into what we're doing? Blockchain, data analytics. It just, again, increases the opportunity to how do we work together and what does this mean? And then I think it's, for me, one of the important elements is the human element in this. People have been working very long hours through COVID. People are still actually recovering from that period. There are limited resources, but in our profession, there's an expectation that we're learning and growing new skills. So it's no longer just those 4 standards that I studied many years ago. It's a whole suite of different information, the technology, economics, climate economics, data and analytics. It's absolutely mind-blowing, everything that we will need to know as accountants. Where and how people choose to work has changed phenomenally, and the expectations on people are changing. The expectations of people who work for us are changing, and the expectations of students that you teach are changing dramatically. How they think, how they absorb information is changing. So that's really interesting. Coupled with businesses are continuing to get more complex and face more complex issues, and then obviously, the increasing regulatory environment and scrutiny. And so then just to reiterate, this newness, this complexity, this uncertainty is just a wonderful opportunity for academics who have a passion for research, because you can really take this and inspire other people with what you find to drive different behavior and do different and new things and help us change where we need to change. And so what I shared today is my perspective on the opportunity and how we connect. There are obviously so many different ways. And many of what you might be seeing and what I say you might be doing already, but just to give you insight as to how we think about it. I really like to keep things simple and practical. And so that's pretty much what you'll see from me today, simple and practical. And Eric made a great statement yesterday, which was around standard setting is grounded in research, but research is grounded in practicality. That's really important. The theory's good as well, but the practicality of it, that becomes really important to make it meaningful for the users of that information. So I thought I might start with my perspectives from a standard setting. And I have done, apologies, Keith and Justin, an abridged version of the AASB mission and vision, because it would be a lot of words on the slide for you to read. But, you know, in short, what we're trying to do is we want to build the confidence of the investor community and other stakeholders from the Australian economy. And we want to do that in terms of external reporting. So how do we do that? We build principle-based accounting standards and sustainability standards. And we want them to be transparent, and we want them to be clear and quality standards. And then what we want to do with that is also to take that and really contribute to the international community and lead in terms of standard setting and influence what happens internationally. So I think to do this, what we really need is timely and relevant information. And that's where there's the perfect opportunity for the research. So what we have within the AASB that most of you might know is we have an evidence-informed standard-based framework, which is really, really important. And there are probably two parts to that. The one is the evidence. We need the evidence, we need the research, we need the data. But we also need the engagement with stakeholders. And so those two things go hand in hand in terms of our evidence-informed framework that we use to do standard setting. So we have many instances of where we have used research from academics, and my sincere apologies, I've only taken 2 today to give you just a touch and an example of 2 cases which I think were really important for us as a standard setter. There are many, many more. So the first goes back a couple of years, but it was when we were looking at the Australian reporting framework. And as you know, there had been debate around whether special purpose financial statements were suitable for many, many years. And we were looking at this issue, and there was perception that there were concerns with the framework. And there were concerns that lots of people submitted special purpose accounts when they lodged their financial statements with ASIC. But there were also concerns that maybe those didn't comply with the recognition and measurement requirements of the accounting standards. And while it was a little bit debatable, at the time the expectation generally was that anything that was lodged should comply with recognition and measurement of the accounting standards. So we suspected there was something, but we weren't sure. What did we need? We needed numbers. And this piece of research was absolutely fantastic. So it was with Brad Potick and George Tanewski and Miner and Nihar at the AASB. And what they went to do is they analysed those financial statements which were lodged and came up with evidence to say that I think it was 71% of financial statements, the large proprietary companies that were lodged with ASIC were doing special purpose accounts. And then of those 71%, I think only 76% actually were applying the full recognition and measurement. So there were 24% of companies that weren't doing it. And so what that data gave us was the ability to say what we think is there, our perception, is actually something that's real. And that was one of the pieces of evidence that we used to make the case to say we need to change the reporting framework. So that was really pivotal. It's I think I must go back to 2019. So it's a good 4 or 5 years ago. But when I was thinking about this, this was an example that just came to mind for me as the perfect example of how research can really change something. So anything with numbers, anything that shows who does what, and what industries they do it in is very valuable information to deal with. This was a perfect example in the sense that we were looking at who should apply certain frameworks and what should they do or what had they done historically. So it lended itself to the numbers, but there are many examples where numbers are really, really, really useful. And, you know, another case of this, just I was reading the papers for the September International Accounting Standards Board meeting, and it was fantastic to see that there was 2 Australian papers, and I think, and I haven't checked this, I think they might have been presented at last year's research forum, but that were presented around sustainability and climate change and the impact on the financial statements, and what does the board need to look at in terms of standard setting to disclose the impacts of climate and uncertainties. So again, fantastic, and very proud to see Australian research used within that. And that research is informing what they're going to do next on that project. So really, really good. The other example, which is just a little bit of a different one I wanted to highlight, was some not-for-profit research, which was completed by David Gilchrist and Andrew West and Yu Zhang. What was special about this is, for us as a standard setter here in Australia, we obviously have a different framework for not-for-profits, although there's a lot of consistency, but the community is different, and there are different needs of users, and therefore different needs for the financial statements. And so having that research that was specific to Australia's circumstances was incredibly valuable. And really what that looked at is, in a not-for-profit, who is accountable? What are they accountable for, and who are they accountable to? And that really then helped us, because at the moment we're looking at a project to say, how do we simplify the financial statements for those smaller charities and not-for-profit entities? And this really helped inform, where do we go with that, and where are the avenues to try and simplify? So again, I would encourage you, think very much about the local circumstances in Australia when you're thinking about topics, because you can have a really big impact for us from a standard setting perspective. So now, this is my day job. This is about what, if I change tact a little bit, in practice, how do I use research for my day job? So I've been in Australia about 15 years, and I've had a number of different roles in different proportions, never just one at the same time. So I'm an auditor. I also advise clients on how to apply financial reporting standards and find solutions for some of the problems that they're experiencing. And then I also act as almost our quality and risk reviewer within Deloitte, where our clients and audit teams are dealing with accounting issues. I have the ultimate sign-off to say, is that the right position, and should we be giving that advice, and have we has the clients got it right where it's an audit client? So I literally research all the time. Now, maybe not research as you would do, in the sense that I'm not necessarily doing statistics around that research, but I'm looking for new information. I'm looking for what people are doing in practice. What are others doing? What have we seen? And I look everywhere. So if I can access a research paper, I'll look at a research paper. Often you can't access them, but whatever I can access, I look at. So what I thought I might start with here is just to share with you some of the things that I think would be good from a research perspective that we would use. And the first one is really real-time examples on topical issues. So one of the great things about having a June year end for most Australian companies is that we can see practice that comes out of Europe, the UK and Hong Kong, because most of their companies have December year ends. And so if there's a new standard that comes into being, or a new interpretation, or a new IFRIC agenda decision, we're able to access that, have a look at that, and then that helps us inform, or at least give our clients some good examples. Kathleen, you mentioned that people ask you, so what have others done? We get that question all the time, just so important. And so when Lisa's came out, that was a good example. people wanted to know, particularly the retailers who had significant leases on their balance sheet, what are the metrics that the companies are going to report to investors? Is behavior changing? Are people now going to buy those assets? And sometimes you won't have that information in advance, but if you do, it's really useful. But they come back the year after and say, so what did people do? And so that analysis after the event is also very useful, because then it can help practice and it can help improve what companies are doing, but it can also inform the standard setting process later on, because you can use it as part of the post-implementation review as well. The next thing was, and I'm not sure, this comes from my 10-year-old son, Waggle, but it's what a good one looks like. It's obviously too hard for the boys to say, and so their teachers go waggle, and they talk about this all the time. But that's really useful. If you can analyze data and go, these are really good examples of disclosure or accounting practices, that's what we want to know. And that's what companies want to know. ESG, pick any areas you want to go and research and look for good examples, practice. The great thing is that the frameworks come off the TCFD, and so there are examples out there. They might not be to the standard that we would look to in our new standards, but a lot of them have gone quite a far way there, and so there is examples out there that we can leverage, particularly in the UK and Europe, which have done some fantastic TCFD reporting. And I'll show you a quick example in a moment around climate resilience. Everybody's saying to me it's one of the hardest areas in the new standards. Explain the resilience of your business to climate risk, whether it's physical risk or transition risk. How do you do that? And you've got to quantify the impact on your financial position and financial performance. People don't know how to do that. So seeing others who've already done some of that thinking, it gives people a vision of what to think about and what to potentially look at, that then helps the starting point for companies here in Australia. Communications, short, sharp summaries are always really useful. Podcasts, I'm not sure if that's something that's broadly used, but if you had a 10 or 15 minute podcast, people love that. It's short enough to keep the attention span, but it also gives insight to people. And that's something actually we're trialing internally in our team when we develop the learning, and it's been really successful to do those short, sharp communication things. So here's an example. Take yourself back 3 years. There's a lot of talk about climate change. You're looking at a mining company and people say, tell us what disclosures should look like. So you know you've got to think about the impacts on the financial statements. We generally know what they are. It's useful lives of assets. It's impairment potentially, and it's decommissioning provisions, and whether those move forward because they'll have to close the mine earlier. But people want to see examples. And so we went across, we said, who else might have some good examples? And we went through a whole suite of UK entities and European entities that had done disclosures. And I don't expect you to read all of this, but the reason I put all that detail on this slide was BP, as an example, went ahead and disclosed in one note all of their judgments around climate change and how it impacted their business. So in terms of impairment, they actually spoke to pricing on their oil and gas and said, that, you know, this is what we've done, and it's within a scenario which is below 2 degrees of temperature rising. So they made the link back to other climate scenarios. And then the others, they talked to those ones I mentioned, decommissioning provisions and useful lives. Glencore, which was very interesting, they went and did an impairment sensitivity. So they said there are 3 scenarios by the International Energy Agency. There's a net zero scenario, there's a stated policy scenario, and there's an announced pledges scenario, which have particular pricing for various of the metals and minerals. They went and ran each of those scenarios. So one of them is literally net zero by 2050, and they said, what impact is that on our assets? And then they said, if we closed down today because fossil fuels were decarbonized immediately, what impact that would be? What impact would that be? And that was pretty brave, because if you look, these are now the recent numbers. At the time, they were probably less sophisticated and bigger, but I mean, 2.4 billion if they close down their thermal coal by in accordance with the 2050 scenario. If they close them down today, 13 billion. So big numbers. They obviously have something like 130 billion of assets. So you read it in that context, but it's still very big numbers, and probably one of the most, the biggest analysis I've seen of impairment from a company. Centrica, which is is like an energy retailer, they did something very different. They actually took their assets and said which are high risk, medium risk, and low risk in terms of the exposure to climate. And they gave different shadings and they grouped it all together. And then for impairment, they went into pricing sensitivity as well based on their scenarios. So quite interesting. But what this does is it just gives us some thoughts to think about and go, okay, what could this look like? You know, I think the International Accounting Standards Board is going to do this project, but I think there is the perception I get from reading some of the literature is people think, well, the standards are there, they've got all the guidance there. But where don't necessarily make it clear is what do those judgments and estimates disclosures look like? And these probably go beyond that and are where we probably need to go over time. So that was interestingly, when I started this journey, it was about 3 years ago, and I thought that Australia might be about 3 years behind. We've now seen BHP come out this year with a similar sort of note around one note which deals with all the impacts of climate in it to bring it all together. So we're starting there, but it's we definitely got a way to go. This was just, again, a scenario around climate resilience. I'm conscious of time, Eric, sorry. So this was an example. This is Unilever. So they do fast-moving consumer products. So they're like Ben & Jerry's and Magnum ice cream, and then they do washing powders. So they looked at water and they said, well, what happens if our communities, there's droughts and our communities don't have access to water to wash their clothes? And so as part of the new climate disclosures in S2, they ran some scenario analysis to say what could that do to their profit or loss? And there are a number of other scenarios that do. That was just one I thought was quite different to see. So these types of things are what our clients are asking. They're saying, where do I start? Where do I go? What does this look like? They don't want to be, in Australia, you don't want to be the first one who goes out. There's definitely a reticence to that. So if they're seeing others doing it, they're far more likely to go, yeah, I'm there. I want to be there too. It's not so much the hesitancy and not wanting good disclosures. It's the hesitancy to be the first one out there. I've found at least. So just some thoughts. These examples, you know, this is obviously very, I say it's not deep research in the sense it's just taking the data from someone else who's presented it. What you as academics could do for us is to find that information, find those best practices, and then share what does good look like? What doesn't work? Is the information that people are putting out there clear? What makes it clear? What makes it useful information for the investors? And then the real challenge is, how does this connect with the front half? What companies say in the front half, does it marry up with what should be at the back half? And sometimes they won't marry up because they're looking at different things, but sometimes they do need to marry up. One of our audit partners did an analysis, a search for climate in this financial statements for a company is fairly impacted. I think there were 45 references in the front half, 2 in the back half initially. So, you know, that started the dialogue. Interesting way to think about it. And then those hypotheses around that you might form on some of that information once you've done that detailed digging and diving and looking for these new things would be absolutely fantastic. And I think there are any number of areas, I don't think Matt's here at the moment from Ernst & Young, but we were discussing at dinner last night, the disclosure around CapEx that companies are investing in technology. That's going to be a very interesting information because it's going to tell us which companies think they're just going to live with the implications of climate on their business and which companies are actually going to change and evolve. And that tells you something about their strategy. So all that information is going to be extremely useful to gather. And the quicker we can gather it as companies start to put it out, a lot of companies will do more voluntary disclosures next year, will be fantastic to see. And I think all of that will only lead to better information, better quality and better disclosures. So just in closing, we look forward to working with you both as a standard setter and in the accounting profession, the business community. We really want to engage, and I hope today I planted a couple of seeds that could grow into some beautiful trees and plants. Thank you.
I think we have a few minutes for questions. Is there any question from the audience? And there's a mic at the back if there's any question you would like to ask Alison. This is a golden opportunity to ask someone like Alison for practical and theoretical questions. No? Kathleen? Yes.
You make me nervous. No, not at all. As Eric said, it's a fantastic opportunity. Do you face a challenge with your clients where they're not trying to do the wrong thing, they're more like green wishing, they're making claims that they think are accurate and that they're doing the right thing by climate managing risks, but in fact they're not? Is that something you have to manage?
Interesting question. I think in our role as auditors, we obviously need to look at what information is disclosed in the operating financial review and make sure it's not inconsistent with our knowledge of the business. So in the clients that I've been involved in, I haven't seen that. My sense is most people actually want to do the right thing. They just trying to work out how to do it and how to tell people what they're doing in the right way. But many clients are going on many wonderful journeys about exploring all the different technologies, and they're careful around the claims that they're putting out there, but they're also telling people that we are doing this. So I haven't experienced that. I know that our regulator has been writing to some clients and saying, you know, make sure, let's understand the claims that you're making. And we've seen that, you know, from press releases they put out around IPOs, people claiming net zero by targets, and then they've gone and questioned, said, do you actually have information to back that? But I personally haven't come across that yet. But something we're very conscious of, obviously.
Thank you, Alison, for your speech. I think that speech was very helpful, not just for academics, but also to practitioners with examples, great examples of how research can be related to what we do on a daily basis. Look, we're going to have a short break for 15 minutes break. We'll be back here in Brisbane time at 10:30 and in Melbourne time at 11:30. So the tea is going to be outside of this room. Feel free to have morning tea and any of the small bites. Thank you.